Hey folks, and welcome to the Pipnotic Symposium for the 7th of February 2020. Today we are going to have a look at a bit of supply and demand theory, and I'm going to throw some currency strength in the mix because I think this is important in relation to cycles, market cycles. Okay, I just made an update to a piece of software that we have in our offering, and that is the Pipnotic currency strength histogram. And I'm not going to go into detail about what this is and what it does. But I am just going to tell you that it's a really good way to help identify the beginnings and the ends of cycles. And if any of you are interested in any form of mathematics or anything at all, I think that it's easy to say that if you look at sin waves or any other visual representation of some kind of a mathematical formula, there's often some kind of a cycle that evolves where you have kind of a trough and you have kind of a peak. The graph goes back to the trough, and so there's a lot of this going on in everything in nature. This is happening in, I suppose, our moods, our eating frequency, bird hibernation patterns, weather patterns, temperatures, but also a lot of other things as well. Also, the way a tap drips or the way the wind blows, but also in the market. So if you look at, I mean, there's a lot of talk currently about this 9-year, 10-year business cycle coming to an end. And when things come to an end, cycles come to an end, there's potentially maybe some time for a bit of contraction. Hence all this worry about this recession just around the corner. There's a lot of talk about a business cycle, and so you ask yourself, well, what's a business cycle? Well, the business cycle is essentially one cycle coming to completion. So when this happens, something changes. So we've been in a period of expansion for quite some time, and we're at the end of this period of expansion, so we can expect some kind of a contraction and kind of a slowing of growth. Okay, and so that's why there's a lot of worry about this as well, because we've had a period of negative interest rates, and so the banks are giving away money, so a lot of people are loaning money to grow their businesses, to buy homes, and a lot of the pension funds in the US, they own a lot of this corporate debt, and so there's a lot of potential for disaster, I'd say, but we're not going to go too much into detail about that. What we are going to talk about is how this stuff is relating to currencies. Okay, and so I've written this little piece of software that I really enjoy using because it just helps me see the underlying cycles in the market. And if we have a look at, this is the Australian dollar, Swiss franc, and you can see how we have these two lines, and essentially this line represents one currency, the other line represents the other currency, and this gray histogram here is essentially the difference between the two. So this currency line here, this is a Swiss franc, and so the software is looking at all of the Swiss franc crosses here, the important ones, and it's forming this index, and we're doing the same here for the Australian dollar, which is the orange, and then subtracting one from the other and then plotting this histogram. And the cool thing about this is that when you see very big pushes, very big deviations from the mean being the zero line here, well, then we can expect we can consider this a bit of a cycle where we have a price around the mean, we have extreme negative deviation, and then we have price moving back towards the mean. So when price leaves the mean, so let's say we're about this point here, we can expect some kind of a contraction to occur because this is expected, because this happens a lot. Okay, and so when price kind of moves up here into these extremes, we can expect price to begin to move inward. And if we have a look at some of the, let me zoom out so I have more data, some of the clues that we can see in such a situation, then we can focus on stuff like currency strength deviation in relation to price. Okay, and so if we use that as an example where we have kind of price going down, we have a deeper push, so we have prices going lower, but we have the strength of these two currencies changing. So we have the Australian dollar is getting stronger, and we have the Swiss franc is getting weaker. So we can expect the Australian dollar to pick up in strength in relation to the Swiss franc. Okay, and I mean, you shouldn't trade this information at its face value, but you can use this to help you choose a side of a market. Do I want to be buying or do I want to be selling? And if we look at this, I can see that my broker doesn't have a whole lot of interesting data, but we can see that we have, based on the data we do have, we can see that we've reached this extreme kind of push lower where price was wriggling lower for quite a long period of time, push like so. And you can see that we formed these lows. We had a push here. This lines up nice with that one. Then we have another one, then another one, and then another one. And so you can see we're starting to form this round bottom. And so this here is price forming. It's kind of coming to the end of a cycle. So you can see very clearly that price has kind of moved down, as we can see here, kind of lower highs and lower lows. And now we're starting to move up. And so we can potentially expect something to happen here, or something to change at least. Okay, so we have lower lows, but you can see here that the strength of these two currencies is changing. So you can see the Swiss franc is getting a little bit weaker in relation to the Australian dollar. So what does that mean? Well, that means that we're probably going to start to move higher. Okay, so we're on the monthly chart. We have this long bias in our minds, and we take this long bias with us down to the smaller time frames. Let's go to the weekly and see if we see a similar picture. You can see here how we had these really strong pushes lower, and then you can see that price has started to kind of dwindle a little bit, and then you could see these currencies were pretty happy kind of trading sideways for a while, and you can see that pretty clearly here. Price just zigzagged back and forth for quite some time. So you can see that we had the Aussie dollar slowly, this move up is a result of the Swiss franc getting weaker, not the Australian dollar getting stronger. Okay, so you can see the Swiss franc getting weaker. You can see the Australian dollar kind of showing a little bit of strength. We're starting to move higher. Then price is just stuck sideways in this little period here, and you can see this is kind of like just a sideways period for a little while. And then you can see it's starting to move down. We have the Australian dollar kind of getting weaker, the Swiss franc getting stronger, hence this slight push lower. Slight, big push lower on the weekly chart. Okay, so you can see that this is starting to dip lower. So thinking what we saw on the monthly chart, which is that we're very low, we could begin to position ourselves long. We have the interest rate differentials between these two currencies giving us positive swaps. So there's two things that are pretty important to keep in mind. We're having these really sharp pushes lower, so we're forming liquidity voids above price. Okay, so when you see really strong pushes down like this, like that, like really strong pushes down, then these price normally go sideways for a bit, and then it'll easily move back up to the origin of the move lower, which we have kind of just around here. Okay, so you can see that we have something going on like that just here. Price is pushing down, we're clearing out liquidity to the downside. Price is bottoming out at extreme readings in the currency strengths. We have extreme deviation from the mean, and so a lot of potential for price to begin to move higher here. Okay, so we have this bias. Let's go to the daily chart and see what we have here. We still have market structure, which is moving lower. Okay, so we have market structure that is intact. What does that mean? Well, that means that we have trend lines that are being respected. So this is telling us that we have a very clear daily downward trend, but remember that we do have on the bigger time frames a price at very, very low levels, and so these low levels are going to attract a lot of buying. There's great value at these low levels when buying the Australian dollar, Swiss franc, and so this overlaps very nicely. All this stuff kind of it resonates with us in our minds because of this. So we have a lot of arguments for seeing what's going to go on here. Okay, so you have price kind of breaking down like that. Also notice here that we have lower lows, we have higher lows here. What's that? That's divergence, currency strength divergence on the daily. This is huge. This is really, really big. You can also see here that we do have kind of price kind of starting to do this and maybe something like that. So price, I'm thinking price will slowly start to wriggle higher, but we don't know. This is speculation at this point. But what we do have are the facts, and the facts are that we have market structure, which is intact. we have price reacting at supply. We have this little area here, which is nothing yet because we haven't really accomplished anything. There's no consumption of opposing supply, but we do have, if we mark this off here, let's just mark off here like that, we do have something like this, okay, at the, let's have a look, at the 60, the 0.6450. Okay, that's what we have down here. And I'm using this here because, I mean, price went down, we moved sideways for one period, and this candle closed above the previous one, this accumulation candle, and price pulled back to this level before it left. So this is where the slingshot was pulled back to. So a potential entry would be at the 0.6449 or 0.6450. But we can't do that yet. Why? Because we still have opposing supply. Okay, so the supply is this here. Okay, so the software found this area of supply for us, and it's still there, it hasn't been removed. So what we need to happen before we can entertain any longs on this pair is we need for price to remove this area of supply. So we need price to do like this, maybe poke into here, maybe go a little bit deeper to really find some fresh liquidity kind of below here, and then begin to move up and pop through the trend line, remove this, then come down and test the area of demand that caused a consumption of this supply and trade this on the way up. And the cool thing about this is, if this played out exactly how we drew, I mean, think of all this. We have monthly, weekly, and daily currency strength divergence lining up. Okay, so we have long-term potential for this currency pair to continue to move higher. Okay, based on the information that we have here. Okay, so let's have a look at this in here. Maybe there's something that we can see clear on the smaller time frame. So we'll go to the 4-hour chart. What do we have here? So we have this area here, but when price left here, we didn't really do anything. There's no supply here. There's nothing in there. Let me move this like that. Go like that. Okay, so we have this. Price came down. We popped up, we moved sideways. There's not a lot of demand in here, as you can see. This is price reacting at demand. Okay, so that tells us that we have demand below price. Okay, so there's no demand in here. This is the beginning of the demand is going to be below this low, because when price came here, we did not really form any demand here. But we do have a few small things on the smaller time frames. We'll see this a lot clearer. Let's have a look. Okay, so we have price coming down. We had this little area here. Okay, so we had this here. It was tested. Price removed it. The area that removed it is this one here. The software found it nicely. So price rallied. We accumulated. The slingshot was pulled back, and then we popped north. So we have something here which is interesting. This could be an interesting area to watch. The 6460, and below that we have kind of a lot going on here. Okay, so we have that, but price has already been to this price level before and traded for quite a bit of time. Price has already kind of done this. Okay, so what does, when price is in a box and it's moving sideways and we have buying and selling going on in the box, what happens to the liquidity in this area here? When we're buying and selling, I mean, the level of liquidity is going down, which is bad for our case. Okay, so we need to see sharp pushes away from areas. We need to see stuff like this. We need to see stuff like this. We don't want to see stuff like this. So because this is located in an area where price was didn't really care much about historically, I'd feel a little bit nervous about trading this. Okay, because price has already been to these price levels historically. But notice also when price kind of came up to here, we had a really sharp push north. This is kind of a symptom of what we're seeing in relation to the currency strength, where we can see a slower advancement in the strength of the Australian dollar in relation to the Swiss franc. Okay, so we're just seeing this. You can see very quickly that we have all these big sharp moves. They're moving price higher. Okay, so this is pretty interesting. So we have the beginning of something going on here. We had this little area that was formed. Price went up. We tested it. We went up. Okay, and so we have some things going on, but looking at this, I can't see this. My broker has no data for me to see. I'd like to see what price is reacting on historically, which we can't see. And so because of that, we don't have any demand over here to the left. All we have to do is wait for demands to be formed on this time frame. And so in order for us to see this, we need price to come back down, form a base of some kind, trade above this trade line, and consume this area of supply. And this is supply because when price left here, we managed to move below these lows. Okay, so this is interesting because when we have kind of these lows here, and typically people have their stops located low here, and so price needs to go down there in order to find liquidity. And also there's a lot of stops located in this area, so when you hit these stops, you essentially you dump liquidity into the market, which can then be used to fill the positions of people who need this liquidity. So price is being pushed lower, so we're kind of like we're advertising cheaper prices. We're seeking liquidity to do what? Well, I think to move higher. We have a really steep downward sloping trend line. Price really moved quickly, and so I want to see this really nice area of demand formed. I want to see this trend line being broken, and I want this area of supply to be consumed by fresh demand formed below price, and then I will look to buy. Okay, cool. So let's have a look at something else. Let's have a look at the Kiwi American dollar. We'll do the same thing. What's going on here? Well, notice here that I don't have enough data here. You can see my broker is flat. Let's go to the weekly where we still don't have any data. Come on, where do we have something? Anything here? Okay, this is good. We have plenty of data here. Notice here that these two lines are very close to each other. They're flat. The histogram's tiny, kind of a little bit above, a little bit below. So we're on the monthly chart, we're just range bound. We're just moving sideways. Okay. So this is telling us that on the monthly chart, if we want to be trading in sync with what's going on there, then we need to be buying at the lows and selling at the highs. Okay. So if we mark these areas off, we have, this is the most recent area. This is the origin of the move that managed to move price above these highs. So we have this here. Okay, price got close to it. So this is the beginning of the buy zone. This is the deepest pullback into that area of demand. And that's all we have there. Above that, let's have a look. We have something here. Okay, and this is the area. I chose this area here because, okay, you can see it clearly here, because price left, we closed below this distribution candle, below this candle. Price came back. Okay, the slingshot was pulled back, and then we left, moving below this low. So this is interesting area to sell at. Price came there, and now we're just pretty much waiting for price to return to this area here before we figure out what to do. Price moved below this low. Okay, so we have a downward sloping monthly trend line. That's pretty huge. So we have the bigger flows moving lower on this pair, and we have demand below price. If you take this information with us on to the smaller time frame, we can have a look here and see if there's anything that's showing up. Notice here that, I mean, this is not very convincing if we look at the strength of these two. What we do have, we spoke about this trade maybe a week or so ago, and we were buying here because this is a nice area. Here we have apparent demand. This is a child because this was actually formed as a result of the existence of this. It went up, and then we had these buy zones. The first one was here. Okay, and then we know that after price leaves, and we know that there's buying there. So this is the cheapest, the most expensive price you want to pay for the American dollar Swiss franc. We went deeper. The next one, as expected, deeper as expected. We went right to the edge of the area, then we left. And so you want to be paying a price no more expensive than the absolute low of this pullback here. Price came to it. We kind of poked into there. We probably have some smaller time frame currency strength divergence at this area of demand, weekly demand. Okay, so weekly demand is pretty massive. There's a lot of buying there. If we look here, you can see here that we had, last time we were down here, we're looking at these historical readings. Price came down, we formed this base. So we can expect that when price comes to roughly these same levels again, if you look at these tests, here we had like a deep push, and then the slingshot was pulled. So if we move like that, these two humps, okay, price went a little bit deeper, and then we came up. This is where we can expect price to come to. And so what you do is you sit on your hands and you wait for price to come back to this area, which it did just here, right here. It came to this area. We formed this area of demand at this place where we can expect price to do something. And then you have this area of accumulation, this one here. This candle closed above the high of this candle. What's the low of this candle? It's right here. So the entry would look like that. Okay, price came into there and we bounced, and now we're wriggling north, and now we're struggling with this. And this is not very interesting supply, because we did not move below this area of demand here. Okay, so we're waiting for price to move through it, which I think it probably will. Why? Number one, we're reacting at weekly demand. We have the cycle of this currency pair on the daily chart, kind of reaching some pretty low price levels, price points, and so we can expect price to begin to wriggle north from here. Okay, and we don't really have anything until we get up to here, and this is an interesting area, because when price left here, we managed to move below this really important low just here, and we're actually closing below there. And then above that we have this here, and this is interesting to us because we had this area of demand just here. I marked it like this because when price left here, we moved above this high. Slingshot was pulled back deeper. When price left here, we moved above here. So this is the beginning of the buy zone. We go a little bit deeper, same level, and now this one managed to trade through it. So now we move this over here, and this becomes our new area of supply. And notice that we have a candle right here. The high of this candle is right there. So this becomes an area for us to watch in the future. Okay. Then we have this one above price just here, which is software found nicely for us, like that. And this one here is less interesting because of all of this. When price kind of trades like that, price will normally kind of come up and trade below it and then cut through it and then look for the price levels of what price has not been to for a while. Okay, and we have that here. Price cut away, we pulled the slingshot back, then we left, and we dumped lower here. Okay, but remember, we're reacting at weekly demand, so selling with slightly lower probability. So just keep that in mind. You can trade it shorter term, but longer term, you don't want to kind of get into this position and just sit on it forever. Let's have a look at this area here. This is the area that we discussed. You know, the slingshot was pulled back to this area, but notice on the 4 hour, we have this. We have this one right there. 4 hour supply. Slingshot was pulled back to there, so we have the beginning of a sell zone there, and right here in this one we have this really nice area right here. Cool, so we have those two areas right there. So we have a few things we can watch. We have this one, which I like. Price kind of went up there and then we left. So this is where this whole move down originated from this, and then we have this one up here. So we have two really interesting areas here to look at. There's nothing to do in here. We'll probably get a bit of a bounce in this one just here. The software has kind of drawn that for us, and we have a couple of nested areas. We have this one here, which has been tested, hence the dotted border of the box. So we don't expect that one to hold again in the future. And so you want to maybe be looking higher, and there's no supply in here. The only traces of supply that we have are much higher, starting here and then essentially going up here and higher. Okay, and so I think we're probably going to wriggle higher from here. We had this area of supply just here, which was tested by this little one here. This one removed it, so we now look to take a trade around here. Okay, that's what we have there. This is the 4 hour stuff, and we're slowly starting to move into dollars. Okay, so you can see that we're having the strength of the dollar pick up more than the strength of the Swiss franc, and so we're starting to see these pushes higher. We're starting to see flows move into the American dollar and out of the Swiss franc. Okay, which you can see pretty clearly here. Okay, I'm going to leave it at that. If you have any questions, please send them in to the forum or put them in the comments below the video. And if you like this material, subscribe, and then you'll get updates the next time I'm busy doing videos. Okay, thanks for watching and have a lovely weekend.